Welcome to BizChat. Today we are privileged to be talking with Dan Awendo. He's the MD for Home Africa, a real estate developer. Thank you, Dan, for having us.
You're most welcome.
Tell us a bit of a backstory of Home Africa.
So Home Africa started about 11 years ago.
Right.
Actually 12 years, and since then we started out as a charmer.
Right.
Pretty much like any other startup where you have an idea as a few individuals, and these ideas were all around developing housing in Africa.
Right.
So we came together initially as friends who shared somewhat similar backgrounds in the real estate space.
Sure.
Some were engineers, some were finance people like myself, others were quantity surveyors and so on. So related business. And individually, they were doing their own things,
right.
Doing small business, small buildings or developments.
Sure.
But we thought that it made sense to come together as friends, bring in capital, pull it together so that we are able to do larger transactions. That's how we ended up coming up with the idea of Home Africa. Very nascent idea initially, but with very aggressive ambitions, at least as far as the founders were concerned.
This year we've seen a bit of rapid change in the board members. We've seen Luke Kinoti coming in July.
Yes.
What necessitated this?
So any company that has a proper governance structure always provides within their board charter for boards to have a retirement plan, succession plan. And so you might remember that 4 years ago, when we started the restructuring process, we got to ourselves into a place where a lot of the directors who had originally started the company retired, so that it could give us a bit more space to bring in new skill, to bring in new energy. And so when those ones came in, we created a charter that allowed for rotation every 3 years. So the exit of some of our directors over the last couple of months is not strange in a company like ours, where you have a proper governance structure. The charter allows for board members who are not willing to progress or who have gotten busy doing other things are able to then rotate, exit, and allow other members or other new members to come in. That's exactly what has happened. So we have 3 new board members who have come in over the last few months. Again, looking to help us with new skill, new networks, and an ability to take the business even further from where the other board members had done.
Looking at your financial statements since 2014, there's been a wider loss. What could be the issue, and what's your turnaround strategy?
It's not exactly an issue, actually. Unfortunately, we are probably the only listed real estate company on the stock exchange, focusing purely on real estate development. So it's very difficult for the market and analysts generally to compare our results with other companies within the stock exchange. Now, we have a very peculiar way of reporting our financials. Remember that real estate development is a long-term engagement. So if you are going to build this building, it will take you at least 3 years from start to end. For the first 1-2 years, you are likely to show losses only because you're still building, you're still investing, you're not selling because you hope to sell when the building is completed to be able to showcase your profit. This is exactly what is going on with Home Africa. The project that we have, Miga, which is a 774-acre golf estate, is a 7 to 10 year project. So the expectation is that within the first few years of operation, we will not show profit because we continue to invest in the project. We continue to make sure that we are adding value to that particular project.
Right.
So we have now completed 1 line of our golf course. We have completed some initial housing estates within the facility, and we expect to do more investment in the area. During the period of investment, it's unlikely we will show any profit.
Right.
But projects of our nature will show significant profits towards the end, because then you get to a completion, you get to increase your completion level, and you get to now start selling a lot more of the projects and the products that you have developed. So initially, I'm not worried that we are showing profit in the initial parts of our years, because this is the time for investment.
Yes,
it's a long-term investment.
Right.
There will be a time when we will now start reaping the benefit of the investment that we have done over time.
Okay, to stabilize it and to tame the losses, is there any short-term strategy you have?
Yes, indeed. We also realize that real estate development is a long-term cash-hungry type of investment.
Right.
So what we've tried to do is to come up with products that are shorter term and that can help us generate liquidity to keep us afloat, but also meet our day-to-day obligations. So we have, for example, started a smart plot business model, which means we go into smaller projects, not as big as Miga at 774 acres, smaller projects, 20 acres, 30 acres, 40 acres, 50 acres, 100 acres. We do value addition on that, on those parcels, and we sell them to the market. Those are short term. Some are 1 year, some are maybe 2 years, but they then help us generate significant liquidity,
right,
to help meet the obligations that we have.
Right. Yeah. So aside from slowed growth and constrained credit access, what could be the other challenges slowing the real estate sector?
Well, you see, at the end of the day, when the economy is not performing well, right, unfortunately, the first sector that gets affected is a sector that requires significant investment,
right,
like the property sector. So people who are buying parcels of land for $500,000, for $2 million, for $5 million, buying properties for 20 million, 30 million, those are the ones who get out of the market fast. And so we end up with a market where people now prefer to invest in consumerism, sure, or in consumer products as opposed to long-term investment like property. So when the economy is not performing, we get affected, and so we have to start looking at products that would provide some level of consumer-related behavior. So, and this is why the Smart Plus business has continued to work for us over the long term, over the short term, because that people can afford. People can be able to pay in smaller bits and pieces over 6 months, over 12 months, over 24 months, so long as you give them the ability to pay in installments. Right. And that has really worked for us.
So how has this performance affected how has it affected the market valuation at the NSE?
The thing about the NSE valuation is that sometimes there is very little correlation between the value of the stock exchange, sure, or the value of the share on the stock exchange, right, and the value of the balance sheet.
Right.
And sometimes the disparity is so large that sometimes it's very difficult to understand. And if you look at not just Home Africa, but all the companies listed on the stock exchange, very few have a direct representation of value on the stock exchange price.
Right.
So it's the same as Home Africa. Now, giving you a simple example, the market capitalization. Market capitalization basically means the number of shares listed on the stock exchange as against the share value or share price. If you look at that value, we're talking about maybe 250 million shillings valuation of Home Africa, compared to the balance sheet value of more than 3 billion shillings. So you have almost just a 10% representation of the actual value of the company. Right. Actual value that sits in the balance sheet. Sure. That's the disparity. But it's also because the market has taken a long time to get a good understanding of how to evaluate the accounting records of the company, but even more importantly, taken the time to read the financials, to be able to understand where the value is actually sitting. We tend to spend a lot of time and speak a lot about the losses that the company is making, while forgetting that the actual value that the company has actually sits in the balance sheet,
Right.
For other reasons.
Right.
Yes.
Prior to joining Home Africa in 2016, you were at Investec,
Yes.
and Loita Capital.
Yes.
How would you assess the two companies, the three companies at the moment?
Well, starting out with Loita, we built a company together with the people who started the company over a 9-year, 10-year period,
Right.
to become one of the largest investment banking companies across the continent.
Right.
Looking at business not just in Kenya, but also in a significant part of the African continent. They continue to do business in that space. They also have a fintech subsidiary, which also continues to perform quite well. And that's a business that I was employed in, so I didn't have ownership in that business.
Right.
But I was involved from day one. I was employee number one.
Wow.
And we saw the transformation of the business over that period.
Now, adding this one as a publicly listed company, are you in a position to point out the challenges if you compare between the previous years you've been with the other companies?
The challenges are not exactly similar. So there are quite a bit of similarities.
Right.
And the similarities are market driven. A lot of the times, if the market is not performing, then it affects everybody equally.
Right.
But there are certain other peculiarities that a listed company has that a private company has. Number one, listed companies have the opportunity to be able to liquidate their shares on the stock exchange,
Right.
compared to private companies. So the owners of public companies have access to a liquid investment in their hands in the form of shares that they are holding, which is different from a private company. Another example is that if you're looking to raise capital, it's usually a lot more easier to raise capital on the stock exchange,
Right.
or if you're a listed company, as compared to if you're a private company. And so some of those peculiarities give advantages and disadvantages for the company at any one moment in time. But I think the crucial area is in governance. Because of the fact that you're a listed company, then you are under a lot of pressure, both from a regulatory perspective, but really also from an accountability perspective, to have a governance structure that can stand the test of time. There has been very little liquidity in the market. Credit squeeze has really affected that market, because a lot of the people at a low income level need access to credit to enable them to buy units.
Right.
We still see a lot of demand in the up market, not enough supply. But also, when government is not paying, the economy is not performing very well, you still find that in that space, you will always get some difficulty, at least as far as demand is concerned.
Right.
So, compared to the rest of East Africa, Kenya's real estate market is still the largest. It's still very, very well performing compared to the others. But I think that the economy and the performance of the economy must continue to support the growth of that sector.
Right.
And if the economy is not performing, you always have a lag on that.
Right. Are you in a position to share the number of properties you have in your portfolio at the moment?
Yeah, we actually don't have that many units. We have large units.
Right.
So we have our largest unit is Miga Golf Estate.
It's ongoing, eh?
It's ongoing. It's 774 acres. So you can imagine it's a huge establishment. Inside of Miga, we have different types of projects that we are doing. The infrastructure by itself is a project. We have 2 housing estates inside that we are developing. One is completed, another one is still ongoing.
Sure.
All the waterworks and roadworks that we are doing are part and parcel of that project. We expect that will take another maybe 3-4 years to complete. So it's a large establishment. Now on the side we also have Lango. Lango is in South Coast.
Right.
21 acres. We haven't done much about it. We've sort of kept that at bay for the time being. Similarly to another one we have in Kisumu on Riat Hills called Lakeview Heights, 96 acres. Also, we've not done much with that. What we decided to do 4 years ago is not to focus on those ones. Take all your resources, take all your focus and put it on Miga, which is the largest establishment, which our expectation is also the source of the largest possible profitability for the group.
Right. Speaking of Miga, when do we expect it to be completed?
I think if you think about what we were meant to do, our primary responsibility for Miga was to develop and deliver the infrastructure.
Right.
The housing estates inside of Miga will continue for a long time.
Sure.
Because people are buying plots and parcels and they are building their own units. So if you go there today, you find in excess of 40 houses being built in the different parts of the parcel.
Right.
But our responsibility will end at the infrastructure level. So we are currently at about 47% of the work that we need to do. So we see ourselves with another 2 to 3 years to complete the infrastructure works.
With those projects you've mentioned, who are your target clienteles?
Middle market.
Middle market.
So our parcels range in terms of pricing from between 4 million shillings all the way to maybe up to 12 million shillings for plots of land. The houses that we have in Miga range in terms of pricing from 6 million shillings all the way to 12 million shillings, 14 million shillings. So we are targeting the middle market,
right? Because
what we are offering is a comprehensive life value, right? In terms of a place where someone can work, a place where someone can live, and a place where someone can play.
Right.
So it's a comprehensive lifestyle that we're trying to offer the middle market.
And with this project, Go County, who are you targeting it with? Because in the counties, of course, you can find the middle income.
So when we go the county route, we go with the smart plot business.
Sure.
Which means it's a notch lower than the middle market. So it's the low to medium income type of household. Those who can afford plots that are ranging between 300,000 shillings and 500,000 shillings. We probably will go a little higher, maybe up to 700,000 shillings, but not necessarily a lot more than that.
Are you looking to diversify aside from property?
Not now. There is still opportunity to diversify down the road.
Sure.
We think that our priority right now is to finish the projects that we currently have, because we think that that's the most important thing to do for now. Subsequently, we see ourselves getting into the affordable housing space as part of the diversification, but not outside of the real estate space.
You've been looking for high net investors. How far is this at the moment?
That's an ongoing process. We are hopeful. There is one particular one we are discussing with. We are hoping that we can conclude with them. But you know, in this fundraising space, you never really can tell,
of course,
until the not just signing, but the money is in the bank. So we continue to expand our horizon, at least as far as targeting various strategic investors are concerned.
So how much is the injection projection?
We hope it can be a minimum of 500 million shillings, but towards about 2 billion shillings. We have quite a bit of work to do, especially in trying to complete the infrastructure works at Miga.
Right.
But we are flexible in terms of what kind of structure the investors will propose.
Right. Yes. What are some of the available opportunities in the real estate segment in East Africa at the moment?
Wow, that's an interesting question. First of all, I think that the affordable housing space is still a very big opportunity.
Right.
We have a lot more people who don't have the house that they need. We think that just sitting on that space for the next 10 years will keep us busy completely. We see the commercial sector, already sort of saturated. We think that the space within the commercial sector must be in the A-type houses. I mean A-type commercial buildings. If you're looking at the mall area, we think that the mall area, you have to be very careful what type of unit you build.
Right.
So those spaces have some level of risk. So we want to stay in the areas which we know, especially the area of affordable housing, because we think the biggest opportunity for us lies there.
Based on your experience, you are an expert in the real estate business. Do you feel like the government is doing enough to support the sector?
I think it's a difficult question, but I think the issue around the interest rates,
right,
is probably going to help. Remember, government is the one that got involved through the various sectors of government to have the interest rate regulated. But with the interest rate now deregulated, we hope that we will see a lot more credit coming into the market, even though it might be considered a little more riskier, but it's going to be a lot more credit in the market. Now, with a lot more credit in the market, the expectation is that you should see a lot of demand being covered by the credit that will come into the space.
Right.
So I think that's where the government can play. I think the other areas where government can play and play much better is in the completion of the development of the infrastructure that they are meant to do. So wherever roads were supposed to come up, that needs to be done. Wherever railway or rail transportation was supposed to come, that needs to be done. Because when those things are done, then it opens up the real estate space.
Right. And
people are able to invest in selected areas where they could not invest before. Right. That's really the government's responsibility. And if they can do that, private sector and government sector real estate players will continue to find space in those areas that are being opened up.
Are you seeing Africa performance improving, moving to the next financial year?
Like I explained earlier, we still have a few more years to go in terms of continuing to invest in our asset, especially the mega asset. If you look at the balance sheet, especially from an asset perspective, it's improving and it continues to improve.
Right.
I think that at the point when we start releasing some of those assets in the balance sheet into the P&L, you will be able to see the biggest changes, and there will not need for us to go to the market and start selling because we have already done the selling. It will be a matter of transferring the assets that are sitting in the balance sheet into the P&L, just because the percentage of completion of our projects has now really significantly improved.
Currently, what is the current status of your deferred income?
We have about 1.6 billion shillings in deferred income. That is sales we have already made. We have already sold that. It's just that it can't show up in the P&L. So, but in time, as we progress the percentage of completion of our projects, all of that 1.6 billion will show itself into the P&L for sure.
Right.
So we have a significant amount that is being held out there.
Which financial institutions are you currently engaging on restructuring and reorganization?
Three main ones.
Right.
So we have EcoBank, we have NIC, or NCBA now.
Yes.
And we have CoBank. So those are the ones we are engaging with on a day-to-day.
Right. Yes. Moving forward, are you looking at other companies as well? Institutions?
Yes, because remember, as a real estate institution, we will continue to require funding capacity.
Sure.
And so, not just with the banks that we're currently talking with, but also other banks who will be willing to engage with us to support the work that we're doing.
Right. Yeah. What are some of the challenges you've been experiencing in the market at the moment?
Well, I think the main issue has just been that lack of credit.
So
while we would like the banks to support us, they have not been as quick to come on board as we had expected. But I guess that has also been something that most of the market has felt.
Sure.
We feel that as we continue to progress the generation of liquidity, especially from our smart float business, that we will look a lot more attractive to them,
Right.
but also to other alternative financiers that can help us to access credit for our business.
Looking in the next 5 years, where do you see Home Africa?
So first I see, hopefully by then we will have finished with the issue of fundraising.
Right.
Which means that the perceived valuation of the business will change dramatically,
Right.
so that the share price will have a very good representation with the balance sheet price, so that there is no huge difference between the two.
Right.
I also see a situation where our business, at least as far as the affordable housing is concerned, will have started, and that we will be progressing deeply towards delivering units in the market.
Right.
I also feel that to a large extent we will continue staying with our smart plot business,
Right.
as it continues to generate liquidity for the company. I also think that the Go County strategy will continue to generate interest, and not just from a smart plot perspective, but also in the development of affordable housing in those areas.
Right.
Yeah.
Finally, tell us a bit about your educational background and how this has shaped who you are today.
Well, my background is finance.
Right.
So I'm an accountant and finance expert.
Sure.
But I've also been a consultant in corporate finance. And I see a situation where I will stay in those spaces, real estate and finance, because those two are pretty much related.
Right.
I have a very big interest in strategy. So I see myself adding that as a skill level for myself.
Sure.
But I think that as a leader, I think what is important is to make sure that I surround myself with the people and with skills that can help propel the company much further. So while I may be an expert in these two areas, I think that there's still a lot of areas that I must get on board to make sure that we can succeed. So for example, commercial is a very big part of our business.
Right.
In fact, it is the majority part of our business, that you have the capacity to create products and sell them in the market.
Sure.
So I surround myself with good people in the company and in the group who have the capacity to make sure that that happens.
Right.
So that we can continue growing the opportunity for shareholders and for other stakeholders.
Right. Thank you very much for having us.
You're most welcome.
Thank you.
Thank you.